Mining Network's coverage of PDAC is brought to you by Tudor Gold.
Hello, we're on day 2 of PDAC and I'm with Adrian Day, the president of Adrian Day Asset Management and the portfolio manager at Euro Pacific Gold Fund. Adrian, good to be with you.
Well, thank you, Peter, for asking me.
What are you thinking of PDAC? We're obviously on day 2 now.
Look, this is always a terribly busy conference. And of course, you know, like you're doing interviews and I'm meeting companies, and you don't necessarily get the full pulse of it until you've finished everything. Yeah. But clearly people are a little more upbeat. A lot of individual investors are concerned, are talking about why gold stocks aren't moving.
Yep.
Maybe we can discuss that later. But no, it's a pretty good show. But the audience is not as full as you would expect with gold at 28, 2900.
Yeah, this is an argument I've been having for a while now. Is the price of gold inflated essentially because obviously central banks have been the one in the market underlying it, buying it, and obviously they're not buying gold equities. So is there a distortion between gold price and equities purely for that reason, or is there more to it?
No, I think that is the number one reason. Certainly that's been the reason for the last 2 years, 22, yeah. Now more recently, after the Federal Reserve started cutting rates, you might have expected gold stocks to get more interest. But I mean, I think the main factor is really when you look at the macroeconomic environment, you've got a reasonably strong dollar, you've got inflation down and seemingly low. I mean, I would argue that, but it's seemingly low, certainly lower than where it was. You've got an economy that appears to be strong, and you've got a stock market that's going up. Well, in that environment, why do you want gold stocks?
Yeah.
You know, and I think as long as every month people open their monthly brokerage statement and the number has gone up from last month, they're not really looking for other things to do with their money.
Yeah, how much of it as well is, because I've been talking to a few people at the moment, how much of it is also people trying to conserve cash for a market correction? Are you finding much, are you doing that yourself in terms of your own asset allocation?
You mean specifically in gold?
Well, not even in gold itself. I'm hearing that a few people are just generally trying to conserve more cash because they're expecting a correction.
I definitely think that's a factor. But of course, a lot of people have been expecting a correction, and I will include myself in that. Yeah. A lot of people have been expecting a correction in the broad market for some time.
Yeah.
No, I think with the gold, you're also getting. I mean, most of the coin dealers in North America I speak to say, "Oh yeah, we're busy." But 4 out of 5 calls are people selling us gold, not buying.
Is that right?
And sometimes they're selling because they need the money. Sometimes they're just selling because, wow, 2,800, what a great price. Yeah. I've now finally, after 15 years, got a profit. I'm gone.
Yeah, I was hearing rumours in Germany that as soon as it started getting into that 2,900 mark, we were starting to see a lot of retail.
Well, they were seeing it even before that, like 26, 20, yeah. And so... And you only have to look at the gold funds over here. Now this is not physical, but the gold equity funds, GDX and GDXJ, which are the 2 largest. GDXJ is allegedly juniors, but it includes things like Pan American and Harmony, so I'm not quite sure how junior that is. But they've got the GDX and the GDXJ. Do you know neither one of those, as of Wednesday night?
Yeah.
So it may have changed. As of Wednesday night, neither of those had seen a single day of inflows this year.
Is that right?
Which is astonishing when gold is at the price it is. GDXJ hasn't seen a day of inflows since September the 16th.
Wow, okay.
And that was just a little... So there's no interest. It's not the people, in my view, it's not the people who are looking at gold stocks saying, I don't like this sector. I think there's just no interest. They're just not looking. And the people that are in gold stocks, there's always a reason to sell, right? You need the money, you get divorced, you die, your father dies, whatever. There's always some reason to sell. And then, of course, people sell and they decide, let's buy some crypto, let's buy Nvidia, whatever. To me, it's truly astonishing. And I'm sorry, I'll just carry on for a minute until you stop me.
Yeah.
But it's truly astonishing. When you look at the last 12 months, the XAU, which are the senior gold and silver stocks in the US, that index, it's not an ETF, but it's an index. The XAU is up 56% in the last 12 months. That is more than twice the S&P.
Yeah.
And yet if you turn on CNBC, Are we talking about how gold is doing so well?
No.
Or gold stocks are doing so well? Is it the front page headline in the Financial Times? I bet you could ask 100 investors, not in this room of course, but 100 general investors, and not one in 100 would have the faintest clue that the gold stocks had doubled the performance of the S&P over the last 12 months.
No.
And so people aren't seeing it.
Is there an aspect as well? One of the things that is said quite frequently is, oh well, once the tech stocks collapse, then people will start piling in.
I think that could be the trigger.
Yeah.
I mean, again, when your monthly statement stops going up the number on your monthly statement stops going up every month, then maybe you start to look for other things. And those other things will be a lot of things. There'll be sectors and markets that have lagged. So foreign markets in general, as you know, have lagged the US. I think this is now 15 years, which is the longest continuous period that global markets or foreign markets have underperformed the US ever. So people will look at foreign markets, particularly the smaller markets, emerging markets, which are, in my view, very cheap and very undervalued and have lagged even more. They'll look at value stocks. They'll look at defensive stocks, income stocks, small cap growth, all of these sectors that have lagged. But I think they'll also look at commodities. And if we just get a little bit of that money, I mean, just consider if you look at the 100 top gold companies in the world, and when you get down to 97, 98, 99, you're talking some pretty small companies, including non-producers. If you look at the 100 top mining companies in the world, it's about 600 billion.
I was going to say the market cap of all of them combined is...
the market cap, I added it up.
Yeah.
So that's the top 100. The five largest tech companies in the US are over 15 trillion.
Yeah.
So you don't need an awful lot of that money. When people move out of that sector, you don't need an awful lot to go to gold stocks to have a meaningful difference.
Yeah. How much of this as well is just political uncertainty at the moment? It feels like I've spoken about this quite a lot at PDAC and over the last couple of weeks. It just feels like we're in such an uncertain time. Is it, especially with Trump coming in? I think in a way, I was expecting when Trump was coming in, things were going to almost settle. He was talking about the war ending within a day. He made a lot of bold claims, but you almost had a sense of, okay, they're going to cut government waste. They're going to try and bring inflation down. Hopefully the Fed can then start cutting some interest rate. You sort of saw a pattern that if things worked out, this is what could potentially happen. But at the moment, it just everything's up in the air still.
Those hopes seem so long ago, don't they? No, certainly at the election, you saw that. After the election, beginning of November. So after the Fed cut rates, which is the first rate cut from the Fed after a rate hiking cycle, is often a trigger for a gold rally.
Yeah.
Now, we'd had a gold rally for 2 years before because, as you say, of central banks, but it's often a trigger for the rally, and you saw inflows start coming into funds, our funds started getting inflows, you saw the gold stocks start moving, and then right at the beginning of November, when it was obvious Trump was winning, I think that changed completely. And the narrative, as you say, was, wow, they're going to cut government spending, they're going to cut government waste, they're going to cut red tape, it's going to get the economy booming, we're going to have peace in the world, and the economy's going to boom, and the stock market's going to boom, and so people made a conscious decision, I think, that they didn't need gold stocks.
Yep.
And that narrative may be continued, basically until he came in. But wouldn't you think, I mean, whatever we think of the disruption, and sometimes disruption, you have to have disruption before you rebuild, and Schumpeter talked about creative destruction and all that kind of stuff. So no political comment here, but whatever you think about the disruption, isn't uncertainty meant to be good for gold? I mean, wouldn't you think in this environment people should be saying, maybe I need a little bit of gold?
I think we are seeing that. Obviously, especially I think a lot of people are arguing at the moment whether or not the threat of tariffs was responsible for the last run that we saw up to about 29.50. I don't know if you've got a view on that. In terms of that bull run that we just saw up to the new peak, and then this correction, what do you think's behind that?
Well, I think tariffs was certainly one of the factors, and increased uncertainty. But the interesting thing to me is, certainly in North America, I know in Europe you've had a more diverse group of buyers, and the general European gold ETFs are seeing inflows. Have seen the inflows for the last 3 months, I think, really, last quarter. But in the US, as I say, the ETFs are not getting inflows. GLD, which is the physical gold, just started getting inflows in the last 10 days. But before that, they had over $1 billion of net outflows this year. But that's changed now in the last 10 days. But the gold stocks are not getting inflows. So it's not the retail investor who's buying. It's not small family offices who are buying. I think it tends to be very, very wealthy people who are looking to protect themselves against this uncertainty. I just have to think that that's going to change. I mean, in a period, for a lot of reasons. But I mean, when you look at uncertainty, that's when you need gold. I mean, that's what gold protects you against. And I don't think anyone can argue that the period ahead is uncertain and will probably be volatile.
Well, I think for me especially, obviously we had the blowout in the Oval Office with Trump and Zelensky. I think it was on Friday, wasn't it?
Yeah.
Obviously that wasn't pretty to watch, but for me what's happened after that in terms of the London summit with Keir Starmer and Macron, and they're essentially now saying that they're calling the shots and they're going to go to Trump with an idea, and how I think if anyone sort of has watched Trump and sort of knows anything about it, I don't think he's going to take that too lightly. I can't imagine he wants Europe intervening too much in his plans. So it seems like, even maybe I'm wrong, but it seems like the peace agreement's now up in the air as well, which is a level of uncertainty that I think people were starting to bake into the gold price.
The guy on screen, that's me, Ken Conkin. I'm the president and CEO of Tudor Gold Corp. I co-discovered the Brucejack mine in Canada's Golden Triangle with my colleagues Joe Ofsnick and Ken McNaughton. And in 2021, Brucejack was purchased by Newcrest for $2.8 billion. We have reassembled the team, and we have made another significant discovery just 15 kilometers north of the Brucejack mine. The Goldstorm deposit today hosts approximately 28 million gold equivalent ounces, including close to 3 billion pounds of copper, making it one of the largest copper gold discoveries in the past 30 years. Initially, Goldstorm appeared to be a large-scale bulk tonnage target. However, recently we had a major breakthrough when we discovered a new complex carrying high-grade gold, hitting in excess of 20 grams per ton gold with intercepts of over 25 meters. Visible gold observed throughout the core suggests the possibility for excellent gold recoveries. Our next steps, it's all about high grade, and more high grade. We plan to expand and explore the potential of this new spectacular high-grade gold system, which initially was one structure and is now four. The history of the Brucejack story seems to be repeating itself. We believe we are on the pathway to demonstrating another multi-billion-dollar project in the Triangle. We would be honored to have you follow the journey as we intensify our exploration efforts in 2025.
I think that's true. I mean, I think one of the things that the Trump administration, Trump himself, the economic advisors around Trump, and also think tanks and so on to support Trump. One of the things that they're looking at, I don't know if you've heard of something called the Mar-a-Lago Accord, which is a name people have given to a sort of collection of disparate policy ideas, some pretty firm, some rather vague, and frankly some conflicting with each other. But the idea of this is to end what they call the extended period of dollar overvaluation, one might argue, but that's, and secondly, to get foreign countries to pay more for a lot of things, including defense, their own defense, and again, to end what they see as the rest of the world mooching off the US. Again, one can argue that. I mean, I disagree with the premise. And then also to lower interest rates because of the US's, I mean, we all know there's an impending debt crisis in the US.
Yeah.
And I think it's all other things being equal, it's going to come to a head by the end of this year. They can't sell long-term bonds anymore. China's not buying. Japan's no longer buying, but China's actively, increasingly selling. And the traditional buyers of long-term bonds are not there. So they can't, this is why they're not funding at the long end at all, because, I mean, interest rates would have to move up dramatically. So these are the sort of policy goals, and everything they're doing, most of the things they're doing, is towards this end. And so tariffs comes into that. Tariffs in their minds, and of course we all know that this isn't realistic, but tariffs in their minds means foreigners are paying more, right? The move to get Europe to pay more for defense, and one could argue that's legitimate.
No, I'd agree.
Why on earth does the US have actual bases on over 100 countries around the world, and why is the US still paying for Europe's defense? 30 years after the end of the Cold War, and and Europe should pay more. So, but it's a combination of all these different things. But one of the policies that's been proposed, and of course Trump likes these grand negotiating stances so that he can, back off a little bit and look like he's more reasonable. But one of the policy, and remember, this is what's called the Mar-a-Lago Accord, is at the moment it's just policy ideas that have yet to coalesce. But it will coalesce into a very clear, defined, policy agenda. Jim Bianco, I don't know if you know him, he's a very well-known advisor in the US. He said recently, you don't need to take this literally, but you need to take it seriously.
Yeah.
And I think that's absolutely true. So one of the ideas, one of the proposals is that foreign governments who are holders of US treasuries should be required to exchange their treasuries, to swap their treasuries for 100-year, zero coupon bonds that are non-tradable.
Right.
And and part of this proposal is if the country gets into a financial crisis, then the Federal Reserve will make them an emergency loan.
Okay.
So, we're not going to pay you interest on the bonds you own, but if you get into a problem, well, then we'll make you a loan and you can pay us interest. Right. But see how that fits into the idea of lowering interest rates and getting the rest of the world to pay more, because they've been mooching off the US for too long. And to all the audience, there's air quotes there. And so the obvious question to that is, the obvious reaction, apart from, well, I thought only Argentina forced its creditors to swap into long-term bonds. Okay, the immediate reaction is, well, who in their right mind is going to do this?
Yeah, that was what I was going to ask you.
And what's really scary, to me what's really scary is, okay, so this is tied with security. You want our 7th Fleet to protect you? Well, then you swap your bonds. If you refuse to swap your bonds, we are not paying for your security, you're on your own.
Okay.
And so you can see how then some countries might say, well, maybe we'll do it.
Yeah, it's like high school bully. Give me your lunch money or I won't protect you.
I'm going to make a political point if I can, and I am not someone with Trump derangement syndrome by any means.
No, never mind.
It's sort of ironic. I find myself in a position of often defending the guy among a group that's just rabid. But the plain fact is that a bully who demands something often gets what he wants because he has the power and the other person doesn't have the power. But does he earn respect? Does he earn friendship? Does the person who's being bullied try to figure out what is the best and quickest way I can escape from this bully?
Exactly.
So when Trump says, for example, to the BRICS, if you turn away from the dollar, which again, I'm sorry, I'm going on a tangent here, but again,
No, it's
I
interesting.
talked about contradictions. To say to the BRICS, if you turn away from the dollar, I'm going to put 100% tariffs on you, isn't that contradictory to his idea of lowering the value of the dollar, right?
It would be eventually, yeah.
So, but anyway, but again, the idea that other countries don't want the dollar is an affront to the US's, prestige and image. But when President Trump threatens 100% tariffs on BRIC countries that move away from the dollar, I'm asking rhetorically, what is the reaction of Brazil, South Africa, and then the peripheral countries like Indonesia? Do they say, oh my gosh, Mr. President, we didn't mean it. We were just joking. Of course we'll come back and use the dollar and buy more treasuries. Or is there a reaction to say, you know what, we better get away from dollar dominance as quickly as we possibly can.
We'll play this game until there's an alternative solution. Yeah, absolutely.
And I suspect it's the latter.
Yeah.
So I don't think, again, you started the conversation on central banks. I don't think the reasons the central banks have been buying gold for the last 2 years to diversify their assets away from the dollar, which is still 55% of reserves, global reserves, global foreign reserves, I should say, and that's the average, amidst the weaponization of the dollar. Is that motive driving that buying going to go away anytime soon? I don't think so.
I can't see it, unless some people have a theory that there's a targeted amount that they want to have in terms of their reserve and whatnot, but it depends what people think the outcome's going to be. Some people think there's going to be a new gold-backed currency between the BRICS. Some people think it is just diversification away from the dollar. It depends what you think the ultimate outcome will be, I guess, in terms of how long this carries on. Right?
Sure. No, I think it's both of them.
Yeah.
It's diversification of reserves away from the dollar dominance in the face of dollar weaponization.
Yeah.
So if you didn't have the dollar weaponization, would they be so eager to diversify reserves? And as you said, when the average reserves get down under 50, get down under 40, at what point are countries comfortable?
Yeah.
Russia's comfortable with 0, but for unique circumstances. Would China be comfortable with 49%? Or do they want to bring it lower? I don't know. It's different for different countries, right?
Yeah, just sticking on the policy side of things. I mean, what do you think of Trump going after his neighbours and his friends to begin with? Obviously, you got Mexico. He had the month delay, right? But Canada, it still seems as though that he's talking about potentially imposing a tariff on them.
Yeah.
What message does that send? And I guess what outcome would you, if we don't know whether or not it's actually going to happen, right? It's still last minute, it probably might not again, but if it were to, what does that do to the gold price and gold equities, do you think? Does it have any influence?
Well, I'm glad you said what is the impact on the gold, because at first you said, what do I think about it?
Yeah.
You're trying to get me into trouble here.
Well, let's talk maybe more about the gold side, yeah.
Because in the US you can't say anything, one side or the other, without getting into trouble.
Yeah.
I mean, as you say, we still don't really know. I don't know when this is going to be published, but just so that people know, we're talking on Monday, when the tariffs are supposed to come in on Tuesday morning or midnight tonight.
Yeah.
Treasury this morning said the tariffs are going ahead, but we don't know what the rate is yet or the details. Well, it's about time you hurried up and decided that.
You ain't got
if
long.
at midnight they're coming in. I mean, I think so. Well, I mean, if I may, to attack friendly neighbors as your very first policy move, again, I think sends a very peculiar message. Canada certainly wasn't expecting it.
No.
And you only have to walk around here, talk to Canadians. I mean,
they're livid.
There's livid, absolutely livid. And again, what I say is, even if Trump tomorrow says, guys, I was only joking, that resentment doesn't go away.
No, I've been talking to many Canadians over the last month, and I haven't met one that isn't furious with the US at the moment.
Truly furious.
Yeah.
So, But the impact again on the gold price, I think, all of this just adds to the uncertainty. And uncertainty is really the biggest friend of gold there is. Monetary uncertainty, political uncertainty, economic uncertainty. This is, this is all positive for gold. And if I may, when I looked at the Mar-a-Lago, what's called the Mar-a-Lago, and I looked at all of the various policies that have been proposed by people around Trump and by, as I say, some of it by think tanks, and of course the stuff that the think tanks are proposing is laid out in a little more detail. The stuff that's proposed by Trump and his team is very vague, but none of it is negative for gold. None of it is negative for gold.
If I may ask you, obviously you run the gold fund over at Euro Pacific, you've got your own asset management firm, Adrian Day Asset Management. How are you positioning yourself in a time like, obviously it's very uncertain, I know you're a gold bull, so in contrast to other investors out there, you probably are, I'd imagine, a bit more heavily weighted on the gold side, but...
Could be.
And for good reason, I'd imagine. But how are you looking at asset allocation in a time like this? Like you're saying, gold equities aren't really performing as well as they should be, especially the junior side. Do you have a preference on allocation between producers, juniors?
Well, in the fund, of course, the fund is a gold fund, so by mandate, we have to be fully invested at all times and except emergency times. So you have to be fully invested in a gold fund. That's a sort of SEC mandate.
Yep.
And so in the fund, it's a matter of where are we allocating within the sector.
Yeah.
And I mean, frankly, although I love juniors, it's more exciting, and I think the juniors, some of them are remarkably cheap, and that's where you can get really big returns. The plain fact is that when most individuals who are not gold bugs, when most individuals first turn into gold, when small institutions turn to gold, when generalist mutual funds turn to gold, they're first going to go to the big ones. They're going to go to Barrick and Newmont and Agnico and Franco and Wheaton. They're not going to go to Ajax Exploration or Moose Pasture Incorporated. And so we are still, although those stocks have already had good runs, in the fund, we are more heavily weighted towards seniors, than I normally would be, just because they're going to be the first to move. Now, in the asset management, which we have global accounts, so in those accounts, most of them, I don't have to put any gold at all if I don't want to.
Yeah.
But you're absolutely correct. We have very high allocations. We're at about, let's say, for a mid-risk global account, we're now at about 30% gold stocks. And on top of that, another 15% in resources generally. And of course, as you know, there's a little bit of a mix between gold and resource.
Yep.
You look at a company like Barrick, which has 22% of its revenue from copper, but other things being equal, in 5 years we'll have 60% copper.
Well, if Rika Dick comes into production 100%,
and their NAV is more than 20% right now. Their NAV of copper is more. But that's still a gold stock. And then on the other side, you've got something like Altius, which is a resource royalty company. I don't know if you know them.
Yeah.
But they have a big royalty on Anglo Gold Silicon Merlin deposit, which Brian Dalton, the CEO of Altius, has said he thinks is their single biggest asset. But we don't count that as gold. So there is obviously a mix. But anyway, 30% in the gold and 15% in royalties, most people would regard that as pretty high.
Yeah.
I don't, because for a couple of reasons. First of all, when I'm investing, I look at risk reward, and that's what everyone should do. You should look at risk reward. Although it's great, and in interviews we're always making predictions.
Yeah.
But when you actually start investing and deciding where to put your money, you shouldn't be saying, I think gold's going to go to 10,000, therefore I'm going to load up on gold. You should look at what's the risk, what's the potential. And there is no other sector that I can think of where the risk reward is as favorable to gold, as favorable as it is to gold. The S&P may continue to go up for the next 3-4 years. I don't know. Although frankly, Nvidia cannot grow as much as Nvidia simply cannot grow in the next 5 years as rapidly as it has in the last 5 years. It simply cannot.
Well, it's already 30 times revenue, so if another.
Yeah, I mean,
Jesus.
I think the Magnificent Seven is what, about 20% of world market capitalization.
Yeah, well, if they're 15 trillion, what's world market capitalization? I think US market capitalization is about 60 trillion, isn't it?
Something like that.
And then I think Asia and Europe is about 15 each.
So all of it's about 100.
Yeah, so it would be around 15%, maybe.
So
15,
it's difficult to think of these companies growing at the rate they've grown for the next few years. But again, it's a matter of risk reward. You can look at something like Hong Kong and China. We have a lot in Hong Kong stocks. Hong Kong stocks, to me, are remarkably undervalued. They're some of the most undervalued stocks in the world. The growth is good, etc., etc., etc. But there is a huge risk. Yeah. I mean, there's a risk of China and the US getting into tariff wars. There's a risk of China, which hurts the Chinese economy. There's a risk of the US doing to Chinese stocks what it did to Russian stocks and prohibiting US people from owning them. And of course, there's a risk of Taiwan. So with China, you've got a really big risk to offset maybe low odds, maybe not low odds, but a really big risk to offset the potential. And so when you look at gold stocks, it is very difficult for me to think of a scenario in which a gold stock's prices would drop meaningfully for an extended period from where they are now.
Yeah.
Now, obviously if gold goes back to 2,200,
scary thought now with margins sort of tightening year on year, yeah.
Yeah, but you look at the gold stocks, they are the disconnect between gold stocks and the gold price is the widest it's ever been, number one. Number two, the gold stocks are trading at long-term low valuation multiples. Agnico Eagle, for example, which is it's now
probably one of the better performers as well.
It's been one of the better performers, but even now, it is trading at a price to cash flow, price to free cash flow that is in the lowest decile of its entire history.
Really?
And normally, of course, when prices go up, you have marginal expansion, not multiple contraction. So normally when the price goes up, you have multiple expansion. And so Agnico trading at about 8.5 times price to cash flow, it's rarely been any lower in its 40-year history. Same for Barrick on a price to NAV. So they're cheap or undervalued on their own history. And the other thing is the margins are expanding.
Yeah.
We tend to forget about that. Every quarterly conference call you get on, the CEO spending half his time talking about costs going up and what they're doing to control costs. And I'm not saying that's not important, but why doesn't someone just come out and say, well, we're really controlling our costs well, we expect them to go up 3.5% in the year ahead, but look at what gold did last year.
Right? Yeah.
The margins are expanding.
Yeah.
And if you look at all of the sectors and subsectors in the S&P, and the New York Stock Exchange, for gold stocks are the ones with the most rapid increase in free cash flow over the last 12 months. So I think the risk in the gold stocks at this point is pretty low. And at some point, someone has got to notice. Warren Buffett likes free cash flow, right?
Yeah.
He's got to be looking at the gold stocks right now.
Interesting.
And people like it,
Yeah. What, in terms of you were talking about price to NAV and a lot of other metrics there that you were referencing with the gold producers. What are the key metrics that you're looking for because obviously aside from management team and jurisdictional risk and ounces in the ground and depletion and things like that, there's a lot of things that people look out for
Of course.
But in terms of just key metrics that anyone can look up, what would be the most impactful, do you think?
No, it's a good question, but I'll answer it by saying I think it's a mistake in the gold space to focus too much on what we'll call traditional multiples, like price earnings, price cash flow, price to NAV, comparing one with the other. Because as you say, you can have two companies with identical production profile, both producing 1.5 million a year, and identical PEs and price to cash flows. But if one's in Pakistan and the other one's in Canada, or one mine is going to run out in the next 2 years and one mine's going to go on for 50 years, they should be trading at different multiples.
Of course.
So I think, of course.
Yeah.
So I think it's difficult to answer your question because I think those other metrics, those other factors are so much more important. To me, though, I think price to cash flow and price to free cash flow are the two most important metrics I look at.
Yeah.
But then you also look at, is that cash flow likely to continue?
How long is it going to go on for?
Yeah. But again, I must say, you started by saying apart from people are the number one thing for me in all companies, even Nestle, Hong Kong Bank, or HSBC, as they call themselves. Apple. Would Apple be Apple without Steve Jobs? Of course not.
Definitely.
So I think that's an extreme case, of course. But to me, people are key. And obviously they tend to matter more in smaller companies, perhaps, than in big companies with a deep bench. Something like Agnico, their CEO is fabulous, he's very solid, he's brilliant, but not taking anything away from him. Amar Al-Judi, sorry, I always have to struggle over the name, sorry.
Yeah.
But they've got a deep bench, a really deep bench.
Yeah.
But nonetheless, he's important, and you look at Agnico, in 40 years, they've only had 3 CEOs. That's pretty impressive.
Yeah, it is, yeah.
Would Agnico be where it is today without Sean Boyd? No, absolutely not. And so you look at, say, Barrick, and Mark Bristow. I won't say a name, that's not fair. Would someone else, not Mark Bristow, have been able to sort out the problem in Tanzania, sort out the problem in Papua New Guinea?
Yeah.
Would he be able to sort out the problem in Pakistan? Probably not.
I doubt. What he did in Tanzania was incredible. And
Yeah.
even just the merger of Randgold at the time as well, I thought that was stroke genius.
Yeah. One has to be a little bit concerned about what happens after Bristow, but Bristow just seems to have this real knack to deal with issues in third world countries,
It's a shame that they have so many to deal with. Obviously, that's the only one.
That's where their portfolio is. But anyway, so I always think people is the number one.
Yeah. No, interesting. All right. Well, Adrian, I really appreciate your time. Thank you.
Well, thank you so much.
No,
appreciate it.
Thank you.
Thank you.